What's up, everybody? Welcome back. This is Josh from Red Short Trades, going over a trade review for a trade that I took this week that worked out beautifully, taking into account three core principles I talk about all the time on this channel. And it's always really nice to have the additional confirmation and confidence that gets built when the plan works out. So there's three things that I look for primarily whenever I'm looking to take a trade. The first thing that I'm still getting more accustomed to the more I trade, and that is the higher time frame breakout. What are things looking like in the higher time frame? Are we creating higher highs, higher lows, and ultimately creating flag patterns that break out of key support and resistance levels? Those have become essential to be key areas where we want to ultimately look at taking a trade or taking an entry. The second thing that I'm looking for intraday, specifically with intraday, I'm looking for momentum. So if I'm taking a day trade, I want to make sure that the stock that I'm ultimately looking at taking it's got a lot of momentum. We're seeing a lot of aggressive candles, aggressive price action, whether to the upside or the downside. Momentum is key for continuation because at the end of the day, I'm not looking to bottom the market or top the market. I'm looking for a momentum intraday. What are buyers and sellers doing? What's the storytelling intraday that is giving me confidence to not only take a trade, but stay in a trade? So momentum is key. Third thing I'm looking at is price action, specifically price action around key liquidity levels. Primary areas that I mark out typically are the prior day high, prior day low, pre-market high, pre-market low, and larger time frame liquidity areas, which I'll show you in a minute. All of those were key areas that I wanted to take into account when it came to taking this trade. So the first thing that I stepped into was the higher time frame. So let's jump into exactly what it looks like on the chart to see a higher time frame form and a higher time frame breakout, and ultimately what was keying me in to take a trade. So here we are on my Webull desktop trading platform. First thing that I'm taking a look at, I'm on the 1 hour time frame. And if you are aware of what Tesla's been doing over the course of the past couple days here, we've been seeing this really nice shoot up. We hit all-time highs, we continued, had some continuation. This is the daily chart. First thing I'm taking a look at is what is the higher time frame doing? Clearly we're making higher highs, higher lows, and we're seeing all of this continue to push up as we broke all-time highs and just have continued. We've been on a tear the past couple weeks. When I jumped down to the 1 hour time frame, ultimately what I was looking at was we saw higher highs, higher lows getting put in. We had these key support levels getting put in here, down at the 414 area. We saw some aggressive selling up here at the 480 area. We saw the build of this consolidation area here, and then ultimately these rejection wicks here for buyers stepping in at this 460 area. And that was, of course, before we saw this break down from there. Now, the key area that on the higher time frame that we were retracing to was first this 430 area. We saw a nice bounce off it, pushed back below it again, and then pushed all the way back into this 415 area. Now, that's just what was happening on the higher time frame. And after having a really aggressive push up, these higher to highs, higher lows, what effectively this is forming is what we call a bull flag. Now, a bull flag is essentially a continuation pattern once it breaks. This means that the market is correcting itself after being overextended from buyers stepping in, push, 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 push. It can't go on it can't continue to go on like that. So eventually the market's going to have a pullback, and that's the correction of the market. And that pullback effectively is shaping this bear flag here, or this bear flag, this bull flag, because we are on the upside. So effectively on the 1 hour, what I did was I had this marked out as I saw this bull flag shaping. We saw this pop up here, we saw this pop up here, we saw this pop up here, and it kept popping, pushing down. And that effectively was giving me this trend line here. So effectively I drew out this trend line. We had some consolidation here on the 23rd of December. It was just before this morning pop. We saw us gap up overnight. So effectively what we saw was this level here getting put in. This is our high of this day, and I saw overnight this broken. And if you notice, we didn't break the high or the low of the prior day overnight in the pre-market. And then this one, we ended up starting to break above it. So I was curious, okay, what's going to happen? We broke above it. We could potentially come back in for a retest of this prior day high for a potential push up. Notice too, we also started to break this bull flag, giving me a signal that, okay, potentially we are moving into that breakout of the bull flag, which is what the momentum was that I wanted to catch. So key point number one, higher time frame. What is a higher time frame doing? I love to look for bull flag breakouts or consolidation breakouts when it comes to a continuing trend pattern. We broke out, saw a nice push up. We saw a bull flag get put in. We just broke the bull flag, and now we're starting to push up again. And so that was the first signal that I looked at morning of the 23rd that was keying me in to take the trade, or morning of the 24th, keying me in to take the trade. So let's go down to the lower time frame, because momentum is key for us to make sure we are set up properly to be able to enter the trade. And so what we started to see, let me go down to 1 minute here, on the 24th, the morning of Christmas Eve, what we started to see was we started to push down here right when market opened, and we didn't get all the way down to this prior day level here. I usually mark these out with purple just so it's easier for me to see on the chart. We didn't quite get all the way down there for a retest of it. We just exploded. And so you saw tons of momentum. These are what big momentum candles look like. Saw tons of momentum moving into the day. So point number 2 that I was looking for, higher time frame break was the first. Point number 2, key momentum. We want to see momentum in the immediate start of the day. That's the first key I wanted to look at. So we started pushing up, and then we didn't get a red candle after that first candle, which we never came back and retested. We just push, put in a red candle here. Immediately buyers ate up those sells, and then we started pushing up again. I was looking potentially for an entry. So my next entry would have been 1, 2, 3, 4, 5. This was my 5-minute candle. I was looking for a retest of that. We never got it, but what did we do? We pushed up above this key level here. So this key level here, if you go back here, this was December 20th. This was the Friday before the 24th. This was the Friday's high that we had broke above. Again, prior day highs, prior day lows are key liquidity areas. So we saw a break above, and I was looking for a potential retest here. And so what did we end up seeing happen? Well, we ended up getting this impulsive move push after retesting. It didn't retest perfectly with a momentum candle I wanted to see. So, but it did end up pushing up above. And then we started to see it just consolidate down here. And as it was consolidating down here, I already know that this area here is going to be a key level of liquidity here, because we saw that impulsive move up. So if you look at the key area here, this whole area here is a key level of liquidity. We saw it break above, come back, retest it, stayed in this zone, and then ended up pushing up. So I was looking for potentially a retest for continuation, again, taking into account key push, momentum, higher time frame break. We already broke the flag. We're continuing to push up. I wanted to see it come back, retest this zone with proper price action before I jumped in, because that's the third piece that we need to look for, price action. So quick review of candlesticks. We'll have a whole other video on candlesticks, how to read candlesticks, but effectively what I am looking for, the primary ones that I am looking for are these first two. I want to see a bullish engulfing candle, which is where the candle, the green candle, when it comes to bullish, the green candle is encompassing and swallowing, if you will, the prior candle before it. Or my favorite one to trade personally is the second most bullish. It's where we see, this is a hammer stick candle. This is where we see sellers step in to push the price all the way down, but then buyers overpower it, pushing price all the way back up to show me that buyers are ultimately in control. These are the only two that I really look for to trade. These other ones get a little confusing. They don't always tell the best story. So they're a lesser, they're not as strong of an entry. These first two are the strongest entry that you can take. So effectively on this trade, I was looking for one of these two candles to form at my key level. So back to the chart, where did we see that entry? Effectively, we got it here with this candle that came all the way back down into the key level. You see it right here. Beautiful hammer candle. We saw sellers push price all the way down. We saw buyers step in, hold price above this prior day pivot or prior higher day on the prior Friday. And then we wanted to see this hold. And it effectively, my stop loss initially was all the way down here with respect to where effectively I would have wanted to get out. And what I ended up doing was we waited, we saw the push up, started to go up. We were still in this trend line pattern, came back down again. You saw another entry here with this green bullish engulfing candle. So that was another key point to potentially enter. And then we saw price dip down here before making the push up. Now, why did I hold on to these? So normally I would have held for a less ideal trade. I would have stopped out because we saw candle close break below my stop loss, which was effectively this prior day level. And what I ended up not stopping out on it was primarily because this was a Tuesday and I had Friday expiration contracts, and I was so confident on the higher time frame, I decided to let it play out. So it was really a bet I was taking because I saw this higher time frame break, and we had all of this momentum through this breakout of this bull flag. I wanted to see if even an overnight swing, we would have eventually swung up to my primary target was this 460 area that I wanted to see, because I wasn't sure if it would come back and retest this for a push down or if we'd break back above to effectively hold it. So what I ended up doing was just monitoring the trade, and effectively what we ended up having happen, we saw the breakout of this bull flag, which again gave me even more confidence that we were heading in the right direction. And I just waited to see. We saw another little flag get put in. Then we broke out of that one. And then we saw another flag come down. We saw sellers try to push price down, but then buyers step back in. And we just waited and let it consolidate upwards because we were still in the trade so long as our thesis was playing out. And we didn't break back below that prior day pivot. So we ended up continuing to hold, and at the end of the day, we saw a really nice push up, took some partials off at the next pivot that I had, another prior day level, and then we ultimately took finals off and left one trailer at the end after we hit the 460 mark. And we saw that carry over into the next day, and the next day ended up getting stopped out on that remaining trailer. But effectively, that was the thesis that we played out. So remember, it was a higher time frame breakout. We saw this upward momentum, higher highs, higher lows, showing us that we were clearly in an uptrend. Saw a pretty steep pullback with a bull flag getting put in, but we held this 415 level. And then we ended up getting a breakout. Overnight momentum started to build, and then immediate intraday momentum right when we rolled into Christmas Eve. Saw a break above this pivot level, this 447 pivot level. Came back, retested it. That was our signal to push up to a higher spot here. And we ended up hitting our profit target ultimately at 460. Really nice $1,400 trade. So key things to keep in mind, really make sure you're paying attention to tickers that have higher time frame theses. If you, based on this one, I also ended up taking a trade today, ended up not working out, but we were also pushing backwards pretty aggressively too. So now notice how it's still holding these prior day pivots, but I was looking for some quick intraday scalps. Just didn't end up working out. But again, higher time frame wise, still looking pretty decent to the upside, but not for an intraday here. We got the majority of this move. Ideally, we'd want to wait till potentially it moves up to this 480, which it still could do. We could see some overnight momentum here, and we'll want to see it effectively get back above this 460, which is a key level on the higher time frame. So I hope that's helpful. 3 things again to keep in mind. Look for the higher time frame formations and pattern breakouts. Look for intraday momentum. That's super key. Making sure you're only trading stocks that have that intraday momentum. Trust me, I still fall into the trap of looking at a stock that doesn't have momentum and then taking a trade. The much higher probability setups have momentum. I need to trust it. You need to trust it. Just make sure you're trading those. The third thing to keep in mind is you want to make sure that you are looking for price action at your key levels. If you don't have key price action at your key levels with a hammer stick candle or a bullish engulfing candle, it's not going to be the best opportunity setup, and you don't want to throw full size into a trade that doesn't have those key things. So I hope that was helpful. If it was, definitely hit the like button, pound the subscribe button like you mean it so you get more of this content. And drop some comments below. What trades have you taken this week? I'd love to hear from you all. Feel free to engage videos, ask some questions. I'd love to engage, see how y'all are trading, and things that we can both learn together as we continue to get better at our trading journey. We'll talk to everybody soon. Peace.